Hi, I'm Al Corlin. Thanks very much for joining us. I am chatting right now with my buddy Jay Taylor. Jay is a regular guest on our radio program, the Corlin Economics Report. For those of you who listen to our show and have been listening to it for the past 5 or 10 years, you know that we focus on asset-based investing. You know, Jay, because of the conversations that we have on air with folks like yourself, Jason Hummel, David Morgan, and others, I am getting to be more and more of a believer. When you compare gold and silver, I think they're both very, very important. I think they're both great places to be from an investment standpoint. But I would have to give the edge, as of today, a little bit, I would say, to silver. And the reason I say that is because silver not only is a store of value, but silver also has some very significant industrial uses. And I like the leverage of a commodity that's trading somewhere between, say, $12 and $15, where it is right now, as opposed to a commodity like gold that's trading in excess of $600. It's much easier to get a triple from $12 than it is for $600.
Well, silver is, as you point out, is an industrial metal, and as long as the global economy is growing as it is now, silver, I think, will continue to outperform gold. It has been outperforming gold, and actually, the silver shares on my portfolio have been outperforming the gold shares.
That's something that David Morgan brought up on the actually on our most recent program. Is he said a lot of people chastise me because I'm not 100% gold bug, but he said look at the results over the past couple of years, so that's interesting. Silver, a fellow who I've known, who we're chatting with right now, also Simon Ridgway. I've known Simon for probably the last 20 years or so. Simon is an incredibly successful entrepreneur in the precious metals industry. Simon has a company now, Jay, that you've been following for the last year and a half or so, Fortuna Silver. Why did you start to follow Fortuna?
Fortuna, well, you mentioned Simon Ridgway, which is probably the primary reason, because Simon's had a good background. He's had a successful record as an entrepreneur in this sector. So we start with management. And when I listened to the story, it was a compelling story. They acquired a property in Peru that was a former producing mine. The economics looked good. When I recommended the stock, there was the prospects of having it go into production within a short order, within a year or so, and that's come to pass. But it had prospects of early production. The share price was quite low. The market capitalization was quite low, and it had enormous exploration potential. So you put them all together: low price stock, good management, production, cash flow early on, and an ability to grow the project without diluting shareholder interest significantly. And to me, it was sort of a no-brainer, especially at 61 cents U.S. when I first picked it up.
Simon, talk to us a little bit, if you would, about Fortuna. Now, when you and I met, you were involved with a company called Radius Explorations. It still is doing very, very well. But Fortuna came along a couple of years ago. Why did you decide to go into, for example, Peru and Mexico, and what is the status of the company right now in terms of production, existing production, and future production?
Well, actually, the idea for Fortuna came from Jorge Ganosa. Jorge is a geologist, mining engineer that's worked with me for many years in Radius. And his family's been producing silver in Peru for a couple of generations, and for various reasons. Good guy
to be involved with. He's been there for a couple of generations.
Been there for a couple of generations, exactly. That was the point. So Jorge came to me a couple of years ago and asked me if I would grubstake him and his family to look. They wanted to get back into silver mining in Peru. Would I grubstake them and assist them in the financial side to put a silver mining production in Peru? So I agreed to do that, especially as, this was going to be a family company with foreign financial backing. I like the idea a lot. It's okay having a silver mine in Peru, but if that mine is run and operated by Peruvians, I think you got a much bigger advantage. So I agreed to support Jorge in this venture. He went to Peru and found the Caylloma mine. We negotiated a good deal on the acquisition of the mine, so we acquired it for, I think, $7 million US we paid, and some shares, not a lot of shares in the company. And Jorge's father and two brothers joined the team, and now basically it should be called Ganosa Silver. It's the president, the CFO, the chief operating officer are all Ganosas, live and work in Peru. So that's where the idea came from. I was surprised about that we were able to acquire the mine we acquired, and we've been very lucky with prices since we did we made the acquisition. The price of zinc now has gone up, I think, twofold since we acquired the mine. And silver has not done bad.
Silver
has not done bad either at all. No. Silver. I think when we acquired it, silver was $7 an ounce. Right now it's $12, and it's looking very strong at that price. So the mine is now in production. I started about 3 months ago. I think January will be our first real full month of production, though, January, February. So this first quarter of 2007 will be our first quarter and I think we'll see some good, strong figures from that quarter.
Yeah, it's my understanding the economics are pretty compelling.
Absolutely.
Perhaps you could correct me if I'm wrong, but I believe you're looking at cost at something like $40 or $45 a ton, and you've got probably metals values coming out of the ground at closer to $200, $150 to $200 a ton, something like that.
Yeah, I think initially we'll be starting at around 80 to 120 a ton, the metal prices. We're going to focus a little more on the zinc portion of the vein initially, and leave the high-grade silver just because the zinc price is very strong at the moment. And it'll give us a good, as you go through your usual teething problems in the first 3 to 6 months of production, we focus on the lower value ore. Any mistakes will be compensated for by that.
Right.
So, but it's still even at that, we're looking at a 100% markup from the production costs. I think 2007 will be a very profitable year for Fortuna, just on the Caylloma mine alone. We also, over the last few months, have acquired quite an interest in the San Jose property in Mexico. We acquired the right to it into 53%. Late 2006, we increased that. We now own 76% of the property. That's a very exciting property. I think we're going to see a world-class resource at the San Jose property.
Yeah.
Jay, I'm curious about one thing. When you initially recommended Fortuna, and that was probably a year and a half ago, the stock was trading somewhere around 60 cents a share, if I'm not mistaken. Yeah. Today we're up around $2 a share. When you have that much of an appreciation in a relatively short period of time, does upside still exist?
Well, I think there's a great deal of upside in this company right now with a lot of the risks removed. I think the price of the stock now at $1.70 or so U.S. money, probably, which is what I look at it, is not an extraordinary move at all. As Simon was saying, the metals prices have gone up a lot. They're in production now, and they weren't when I first recommended it. They've poured their first metal. I think they've gotten their first check, if I'm right, Simon. And actually, we're looking at something, if I understand, something on the order of a cash flow of $17 million in the first 15 months. So if you're looking at 40-some million shares, I think it comes out to something like 30-some cents a share, perhaps in cash flow for the first year for a company that's selling at $1.70, call it in U.S. And this is at a small operating level at 500 tons per day. They're looking to ramp this up to 1,100 tons per day by within the next couple of years, I think by 2011. Production of silver from this silver, lead, and zinc and will go up significantly. So we'll see earnings climb. I think this is a really good earnings story over the next few years. So just on the basis of sort of standard, forget the exploration geology, which I think is huge. I think enormous upside potential in both the San Jose as well as the Caylloma. We're looking at a company that's got, I wouldn't be surprised to see this $3 to $5 stock by the end of 2007 if the company executes its business plan. I think this has a lot of upside potential in it. And, in talking to Simon, really we're looking at something very significant perhaps at the San Jose. Not just a small operation, but potentially, but could be a world-class operation. San Jose will, as I understand, will be growing also from about 350 tons per day when it goes into production late in this year, supposedly, and then probably ramping up depending on how how much metal they find. But I know from a geological perspective, they think there's something potentially very big at San Jose. We underscore the word potentially in this business because we don't know for sure. But but people, geologists who study these things, are looking and saying this thing looks really, really very, very exciting.